Okay, fam, welcome back. So today we're going to be going over the buys, sells, and dividends for the week of May 18th to the 24th. So with that being said, let's get it. All right, so we're going to start here with M1 Finance. So we got Brookfield Real Assets Income Fund, or for short RA, 762 and 1 cent from PSEC. We don't have as many positions or as much income on this portfolio as of right now, but that is something we will be tending to in the future. As you guys know, dividend investing does take time, so it's not a quick process. It is a long-term process. Okay, so the total position that we have for PDI right now is 135.66 shares at 2031. This does round up to, with the 22 cents per share, roughly about the $30 a month mark. We're just slightly under that, so we're probably going to do one more day of buying and then move on to the next. This one was pretty much already at 30, but we just didn't have quite enough shares to get right over that dollar mark. Trying to be real precise here, but is what it is. So 763 on that one. Now, in terms of the Robinhood dividends, we got 33.75 from Triple QI, 34.19 from IWMI, and 647 from XDTE. Again, all of these should be around $30 a month, as you guys can see, and that is, of course, the first goal. It's 30, 50, 70, and 100, and then we could talk about maybe adding some newer positions to the portfolio after that. So the total amount for that comes out to, you can see the left one is M1, the second to the left is the Robinhood dividend, so 74.41, and then 366.11 for profits in terms of this week. So we sold Serve for $366.11. It was, I can't remember the exact percentage gain. I think it was like 18 or 19%. So it was more than the 15%, which of course we'll always take. But again, the minimum is always 15. And had the opportunity to sell QUBT for almost $600. But unfortunately, we got a little short-sighted here. We decided to sell some calls for about $70 in premiums. Did not realize that this thing was going to start rocketing the last day of the week. So now we got to wait until next Friday and see what happens then. So but we did take a partial profit off the table. But again, we're not really going to count that as a profit until we get completely out of the position. And we're also not going to take a new swing trade in place of that one until we get completely out of the position. So there is that. Now, in terms of the options, premiums, and positions that we took on this week, we're going to go over that right now. So TSLL, we opened this on the 22nd. Therefore, obviously, you guys know covered calls. This is for a 38-day expiration. So 6/20/25 is the expiration. That's $155 times 16 contracts. So I think that's $2,480 if I'm not mistaken. And the strike on this is 1570. So even if it hits our strike price, we're still going to make a ton of profit anyways. I think it's just short of like 7K or something like that. And the delta is relatively high. It's about a 0.5 delta, and our average share cost is $11.75. So there's a good chance we may end up getting the shares called away. That's fine. We'll just reposition at lower prices when they happen and continue to accumulate more shares. So Soxel, there's two of these here. So they're both on the 23rd. They're cash secured puts. Expirations are on the 30th. So that's 1 week. And we have 38 times 1 and 37 times 1. With a 14 and a 14.50 strike price. You can see those two here. And then the TSLL right there. And then last but not least, QUBT. The opening on this is 522. It's covered call. Expiration is 530 for 35 times 2 with the strike price of 13.50. And that'd be 2 contracts. So in terms of the amount of money we'll make if they do get called away, which I suspect based on the charts, QUBT is probably going to go higher next week. We're probably going to miss out on quite a bit of those gains. But then again, the premiums make up for some of it. So a good chance we'll probably get it called away next week. But even at the 13.50 strike, it should still be some pretty good profits, maybe like $500 or something. We'll have to wait and see on that. So the total number for that for the week comes out to $2,625 in premiums for a total on the week of $3,073.15. Okay, so the buys and the sells that we had was we bought QUBT, which obviously we still have. We bought PDI. We showed you that throughout the week, and then GPIX, which we showed you obviously yesterday as well. and we sold serve for profit and sold a small piece of QUBT. So let's go over the dividends first. And again, the reason why we do this every week is basically to show you guys, like, we are actually doing the thing that we're talking about. We're serious about this, committed to it, and just kind of giving you guys an update on everything that's going on. So that way, if you, for whatever reason, get discouraged, you can see what's going on with us in real time, and it gives you an idea of just how powerful consistency really is. Okay, so take a look at the okay, so my bad, I was mistaken that for May. So it looks like the 33.75 here from Triple QI on this one. And we already told you why we bought IWMI, because if the Fed cuts rates again, the top two things we think likely is going to rocket is going to be small caps and crypto. So of course we are slightly in profit now, not as much as we were, but that's fine. We're not expecting the biggest moves to come until the Fed cuts again. So 34.19 here for this one, pretty good, I would say. And last but not least here is going to be XDTE. The XDTE and AIPI, with the rocket mode that we've seen the markets on lately, have recovered quite a bit of the drawdown too, which is also very nice. But again, if it just becomes cheaper, we just buy more until eventually it no longer makes sense to hold the position, or we just continue to hold it. So 647 here, and that would be the dividends. So now we'll go into the actual trades themselves, because the dividend payouts, they're not really trades. Okay, so you can see we don't have serve anymore. Again, once our profits roll in, we're out. This is in and out, very, very, dry trade, so to speak. We don't get emotionally attached to any of the things we do. As soon as we see the profit, we take it. As soon as we see the buying opportunities or the trigger, we take it. Okay. There is no in between. It's just money. That's all this is. So you can see the buy here at 10.03, the sell at 11.60. So the difference would have been, well, exactly 366.11. So now going into, we'll do QUBT. I already did PDI, so there's no need for me to show you guys any of that here. Okay, so we start from the 18th, so that'd be this right here. You can see the 237.88 at 11.35. We did sell basically the laggard stock, the shares that we had. So we had roughly about 240 shares, but as you guys know, you can't do cover calls or cash secured puts with anything of any share amount less than lots of 100. You have to have at least 100 shares of whatever you're trying to do cash secured puts or cover calls on. So we just decided to sell the net and pocket the difference. So again, technically we did make our profit already, $520, but again, we need to get out of the entire position at a profit to actually cement that in. So you can see the numbers there, and then the two contracts for the cover calls for QUBT. And GPIX, I mean, we're kind of dual purchasing here, truthfully. So we're purchasing PDI straight out of the net income, and then the GPIX, basically what we're doing is we're taking slowly taking a piece of the premiums that we get from options and pushing this into the dividend ETF. So that's kind of a way to accelerate the cash flow growth process, is by putting the options premiums into them. Some people do this. I'm sure it's not the first time you guys have seen this. So 1470 average here at 7.53 shares, which again is basically nothing. And we'll go over the buys here. So 2.93, 47.66, 1.58, and 1.57 at roughly about the 47.30, 47.50 mark. Okay, so we covered all those. Now we'll go ahead and go over the options positions. So in terms of TSLL, basically what I'm going to tell you guys right now is I think that we possibly, and again, I'm not saying it's going to be an extreme sell-off, but we possibly, based on what the charts are showing and kind of the summer, I can't even say it, summer doldrums, which basically means that usually in the summertime, the markets are kind of dull, so to speak. Not always, but in 2023, obviously July was exceptional. You guys remember how good that run was, but more often than not, a lot of the summer is kind of dull. It doesn't really do much in the markets because, again, um, what is everybody doing during the summertime? They're out there with their families, spending time on the beach, going places, all that kind of stuff, vacation, right? So I could be wrong. Maybe June will be an extremely bullish month, but I'm actually expecting a slight pullback, probably somewhere after the first week of June, going into the end of June, maybe some kind of slight pullback. So we're thinking maybe Tesla's not going to actually really rocket until probably later next month or perhaps in July. Again, the last time we saw the robotaxis or the rollout event last year, there was a slight dip in the market in Tesla, and then it kind of went sideways, and then it took off for all-time highs, right? So expecting something very similar here. I'll tell you guys right now, if the shares get called away, we'll just throw on more cash secured puts when it makes sense. Take our profits. If they don't get called away and the price is relatively flat, we'll just maybe throw on some more covered calls. I meant to say covered calls. The next time that we get out of these, and if the price is down, then we'll probably just accumulate more through cash secured puts, because again, Tesla should be it should be a pretty expensive company once the whole robots and robotaxis thing get rolled out, and the all of the profits and cash flow from that's fully priced in by the market. I would say at least $800 to $1,000 a share post stock split. I don't see any reason why that couldn't happen. Okay, so Soxel, $14 strike price there. And again, this is kind of the intention behind this is to get our shares based on the gap fill, right? We already told you about this. So $38 times one contract there. Because the probability of anything in the markets is not just the S&P 500, but anything in the markets that's considered to be an asset to have a gap fill is extremely high. It's like 98% of the time or something the gaps do ultimately get filled. So 37 times 1 on the 1450 put here for Soxel. And yes, we do actually intend to get the shares assigned to us here. So because again, we can just flip it and do covered calls on that. And then the QUBT, 1350 strike here, and that's $35 times 2 contracts. So actually calculating, let's see here, the 13, I think it was 1350 minus, or yeah, 1350 minus 1135, and then we would times that by the 200 shares. So we would still lock in, assuming the shares get called away, $430 in profit plus the $70 in premiums. So if I was actually to do, so let's say 2,700, we'll just do times 0.15. So a 15% gain would be $405 in this case. So between the premiums and the profit, we would actually be greater than 15%, which is good. That's exactly what we want. So we thought all this stuff through before we even did it. So once again, in terms of the dividend positions, GPIC, GPIX, JEPQ, Triple QI, IWMI, SCHD, ACP, PDI, BSTZ, XDTE, AIPI, and SPYT. Those are the 12 positions we're looking to accumulate. We have 9 out of 12 of those at 30. The remaining ones is GPIX, SCHD, and BSTZ. Now, ACP might get replaced with something else. Not really entirely sure yet, and we'll just have to wait and see on that one. And for now, TSLL and Soxel are going to be the ones that we do the wheel on for options, premiums, and some profits, of course, too. Some other ETFs that we're looking at some point in the future to potentially get into for more options premiums once we have more capital on hand is we have some additional ones, and that's going to be CONL, MSTU, MSTX, and BITX during the crypto winter lows. We already told you about the plan with that. And NVDL, I don't actually have it written down here, but NVDL, and also, let me see if I can find it here. I know it's here somewhere. GDX and maybe SLV at some point. So GDX has pretty good premiums as well. This is basically a gold ETF, and this is a silver ETF. So we're taking a look at those in the future as well. So anyways, hope you all enjoyed this content. Please like, comment, and subscribe, and I'll see y'all later. Peace.